All right, listen up. Today is October 10th, 2025. The market doesn't sleep, so neither should you. We're talking about a titan, Charles Schwab. This isn't some stuffy Wall Street story. A guy who saw the little guy getting fleeced and decided to act. He built a money machine, an empire. Not by shutting people out, by inviting them in. He took the keys from the pinstripe suits. He handed them to you, to me, to everyone. One man's vision blew the doors off old-school brokerages and created a revolution. Think of it as a simple timeline. 1930s, he's born. 1960s, learning the ropes. 1971, bam, he starts his firm. Why? The big guys charged an arm and a leg for every trade. It was a club. You weren't in it. Schwab said, no more. He used technology. He used smarts. He slashed commissions. He made it possible to buy a piece of America. Let's rewind the tape. Charles Chuck Schwab wasn't born with a silver spoon. He was born in Sacramento, California, back in 1937. He had dyslexia, which made school tough. But did that stop him? No way. It made him work harder, think differently. He went to Stanford University and got a degree in economics. He saw how the world of money worked from the inside. He even did a stint at Stanford Business School, soaking up knowledge like a sponge. He wasn't just learning theory. He was looking for an angle, a way to shake things up. He saw a system that was slow, expensive, and built for the rich. He got his hands dirty. He co-founded an investment newsletter, trying to give people good information. The brokerages back then were full service, which was just a fancy way of saying full fee. Schwab saw the inefficiency. He saw the highway robbery. The big moment came in 1971. He and some partners launched First Commander Corporation. In 1973, he bought out his partners and renamed the firm Charles Schwab & Coffers, Inc. He set up shop in San Francisco and prepared to launch his attack on the old way of doing business. So, what was the secret sauce? It was one beautiful, powerful idea: the discount brokerage. On May Day, 1975, the government deregulated brokerage commissions. Before that, fees were fixed and high. After, firms could charge what they wanted. Schwab pounced and slashed commissions. He wasn't offering hot stock tips. He wasn't offering fancy lunches. He was offering one thing: cheap, a simple way to buy and sell stocks. You make the decisions. He makes the trade. Simple, powerful, revolutionary. The move blew the industry wide open. He was one of the first with 24-hour phone trading. When the internet arrived, he jumped on it. He launched one of the first online trading websites. That drove costs down further. Trading became faster than ever. Over time, he added banking, mutual funds, marketplaces, IRAs, advisors, a full financial supermarket. You want to see the scoreboard? Let's look at the scoreboard. All this innovation and customer focus built a monster of a company. As of late 2025, we're talking about trillions of dollars in client assets. Trillions. That's your money, my money, your neighbor's money, all powering this engine. The company serves tens of millions of brokerage accounts, revenue in the tens of billions every year. It has weathered market crashes, recessions, and bubbles, because it provides the plumbing for modern investing. His moves forced fees down across the industry, culminating in zero commissions on most online stock and ETF trades in 2019. The growth made Charles Schwab a billionaire many times over, by helping millions build their wealth. SCHW has rewarded believers over the long haul. The story of Schwab's financial success isn't just about one man getting rich. It's a testament to a disruptive idea and the power of the everyday investor. So what can we learn from the man himself? Schwab has been dishing out advice for decades. It's not complicated, folks. It's simple, powerful stuff. First and foremost, get in the game. Don't sit on the sidelines, paralyzed by fear. The biggest risk is not investing at all. Inflation will eat your cash alive. Start now. Even a small amount, invested consistently, can grow into a mountain over time. Don't wait for the perfect moment. It doesn't exist. Keep your costs low. A 1% fee can devour a third of your returns over decades. He championed low-cost index funds and ETFs. Always, always, always check the expense ratio. Another pillar. Diversify. Don't put all your eggs in one basket. Own a mix. U.S. stocks, international stocks, bonds. It cushions you when one area falls. It's not about home runs, it's about staying in the game. Finally, ignore the noise and think long-term. Create a plan based on your timeline and risk tolerance, then stick to it. Automate your investing. It's not exciting, but it works. When you think of Schwab, you might just think of a website where you buy stocks. Wrong. The Charles Schwab Corporation is a financial octopus. At the core is brokerage, the engine room, serving everyone from small traders to massive institutions. The TD Ameritrade acquisition brought millions more clients and the beloved Thinkorswim platform. Then there's Schwab Bank. It holds client cash sweeps and profits on the spread between what it pays and what it earns. It offers mortgages, home equity lines of credit, and checking accounts great for travelers. Schwab creates its own mutual funds and ETFs, among the lowest cost, capturing management fees. Robo-advisor services build and manage diversified portfolios for very low or even zero advisory fees. Schwab Advisor Services provides custody, trading, and tech to thousands of RIAs, a massive, quiet, profitable backbone of the industry. Put it together, and you have a fully integrated financial services behemoth. The biggest brokerage player in the game, period. Okay, we've covered the history, the strategy, the empire. Now let's boil it all down. This is what matters for you. Today, right now, here is your final practical Schwab-inspired playbook. No excuses. First, start investing this week. Even $50 is fine. Open a brokerage account. 10 minutes. Set an automatic transfer from your bank. The most important step is the first one. Get off zero. Compounding needs time. Give it time. Second, go on a fee hunt. Pull up every investment. Find the expense ratio. If it's over 0.5% for a simple fund, find a cheaper alternative. Look for broad market index funds or ETFs. Low-cost providers, Schwab, Fidelity, Vanguard. Third, build a simple diversified portfolio. Total U.S. stocks, total international, and bonds. Adjust by age and risk. It's your financial seatbelt. Fourth, automate and ignore. Dollar cost average every payday, then leave it alone. Turn off the financial news. Your job. Disciplined, long-term accumulator of assets. That's how you win the game Charles Schwab helped create. Now go do it.